housing market is in some serious trouble right now. You see, mortgage rates have just recently skyrocketed again, and as a result, we're now back at extremely low housing affordability. We saw some recent relief with mortgage rates back in early August, but now things have completely changed and mortgage rates are starting to surge again. Now, this is one of the most significant factors to keep your eyes on because mortgage rates have a lot of power when it comes to the housing market and house prices specifically. You see, mortgage rates were the biggest reason we saw this housing boom in the first place when they hit record low rates, and that brought on a lot of buying demand. And now we're seeing the opposite take place as they start to spike, and now we're seeing house prices decline nationwide. So there's no denying the fact that mortgage rates are a huge factor to consider when looking at the future of the housing market. So we have a lot to talk about today. Besides even mortgage rates, we also have to talk about the 0% down payment program that just came into effect. We also have to talk about pending sales declining, and we have to talk about buyer demand just completely disappearing. So we're going to break all of this down, including why these mortgage rates are spiking, what's causing that, and what that means for the future of the housing market as a whole. But before I get started, do me a favor and support the channel by smashing that like button, and if you haven't already done so, definitely subscribe and hit that notification bell to watch more content like this. And with that said, let's jump into it. Mortgage rates are back over 6% again, which is bad news for home buyers and sellers as housing is more unaffordable again. We're seeing a strong surge taking place at the moment. With mortgage rates, we were as low as 5.05% back in early August, and now in just a month's time, we've gone all the way to 6.02% and even got as high as 6.23% just the other day. Now that's over a 1% increase in just a month's time, which is absolutely insane. So what is causing this to happen, and why on earth are we seeing these mortgage rates just skyrocket all of a sudden? Well, essentially this comes down to Jerome Powell, who's the Federal Reserve Chair, and he gave a speech at Jackson Hole, Wyoming, and talked about how his intention is to stay very aggressive with his monetary policy until they can tackle this problem of inflation and get back down to those 2% levels. Now, by being aggressive, they're referring to their monetary policy in which they plan to keep hiking interest rates, which will affect the borrowing costs on things like cars, HELOCs, credit cards, and personal loans. That's going to be more expensive as a result of them hiking their interest rates. Now, separate from that, they plan to continue offloading their balance sheet, which is filled with trillions of dollars of treasury bonds and mortgage-backed securities. Now, this is a big deal because treasury bonds and mortgage-backed securities play a huge role in which direction mortgage rates go. If you have massive demand seeking these treasury bonds, you generally see mortgage rates going down. And then if you have hardly any demand, then you start to see mortgage rates go up. So throughout the pandemic, we saw the Federal Reserve purchasing hundreds of billions of dollars of these treasury bonds and mortgage-backed securities on a monthly basis, building up this massive balance sheet of trillions of dollars worth. And that, as a result, caused mortgage rates to hit these artificially low levels that we've never seen in our lifetime. Now, that was completely unnatural. So when you start to do the opposite and you're offloading that balance sheet of treasury bonds, you start to drive mortgage rates upward. So for the past few months, there's been many investors in the camp that believe that the Fed has been nearing the point of a U-turn. Some believe it's near the end of the year. Some believe even after September, they may do a rate hike and then start to do a U-turn in their monetary policy. Because obviously, once they taper the inflation down, what their goal is going to be at that point is to prop up the economy again, start lowering interest rates, and bring us back to an economic boom cycle. So when Jerome Powell took the stage and talked all about how he plans to stay aggressive until inflation is back to 2% and how he doesn't want to repeat the same mistakes that the Federal Reserve made back in the early 80s when they changed their monetary policy too soon. You can only imagine what these investors started to think and how they started to realize that this guy is serious about tackling this inflation, and there's probably not going to be a U-turn taking place anytime soon. All of this information is baked already into today's mortgage interest rates, as we're already seeing ahead as far as what's to come for the economy. And so as a result, you can see if you look at the graph, the mortgage rates since the day of that announcement have gone up drastically. You see, some people make the mistake of thinking that it's the day they hike interest rates that all of a sudden mortgage rates shoot up to 6% or shoot up to 7%, and that's just simply not the way it works. People are looking ahead as to what's to come in the future of the economy, and that is baked baked into today's mortgage interest rates. So with mortgage rates rising, naturally demand just continues to fall, and we've seen evidence of this recently with the Mortgage Bankers Association reporting that mortgage applications are down again 2% week on week, which is an even bigger drop than it was the previous week, and we're seeing it down over 23% year on year. Now these numbers are continuing to decline, and as mortgage interest rates continue to increase, if that happens, we're only going to see more and more home buyers start to exit the market. Now this has been hurting the rental housing market because as home buyers get priced out of the housing market, they then turn to rent a house instead, and as a result we have additional demand going into rental housing. And so even though house prices nationwide are starting to decline, house rents are actually at the highest levels yet according to Realtor.com, with median rents coming in at $1,879 a month. Rents are currently up over 12.3% year over year, and as a result we're seeing millennials and Gen Zers starting to feel the effects of inflation worse than most. You see, compared to the average American feeling inflation at 8.5% year over year increase, we're seeing millennials feel it at an 11.6% increase and Gen Zers feeling it at an 11.3% increase. And the biggest reason for this is rents going up because most of millennials and Gen Zers are renters. In fact, less than 50% of millennials are homeowners compared to 80% of baby boomers being homeowners and 70% of Gen Xers. Now, as more people turn to rent, pending sales are continuing to decline as well, and pending sales is a great stat to look at because it's a slight look into the future of the housing market, as these are sales that haven't yet been completed. Well, the National Association of Realtors released their latest data on pending sales, and we saw that month over month we're down over 1% from June to July, and year over year we're down about 20% with pending sales. So as you can see, demand is continuing to fall nationwide, but one thing going against that grain is this new 0% down payment program coming out from Bank of America. Now this program is called the Community Affordable Loan Solution, and this is a product that allows you to put 0% down, pay zero closing costs out of pocket, so essentially you can get into buying a house without coming out of pocket. Now this isn't a nationwide program at the moment. It is specifically geared toward Latino and Black communities in these specific cities of Los Angeles, Detroit, Charlotte, Miami, and Dallas. Now you don't actually have to be Latino or Black in order to qualify for this home loan. You just need to be targeting a home that is in a Latino or Black community. But with that said, you do still need to qualify through underwriting just like you would any typical home loan. Now the whole goal with this is to essentially bridge the gap between whites and Blacks and Hispanics with home ownership, because up until this date we have a 30% gap in home ownership between whites and Blacks and a 20% gap between whites and Hispanics. Now my personal opinion on this is this will create a little bit more buying demand as far as these cities and these markets are concerned, but not to the point that it will supersede the overall fundamentals and dynamics of the market that's already taking place. Firstly, this isn't a nationwide product, and while some YouTubers out there might want you to believe that this is going to help prop up the housing market as a whole, it's really only available in certain cities, and so I really don't believe it's going to have a tremendous effect unless things start to expand to a nationwide level and we see more people being able to come on board with this. And the second reason why I don't believe this will have a huge effect is that at the end of the day, housing affordability is still a major issue that doesn't get solved with this program. You see, we still have higher interest rates mixed with higher prices, and so regardless of a 20% down payment, a 5% down payment, or a 0% down payment, yes, that does help with just kind of getting into a house, having that upfront cash, and that definitely helps in that regard. But if you can't afford the higher mortgage payment, which is significantly higher than it just was a year ago, then you're still not going to qualify for that loan. So that alone would eliminate a lot of people that would like to take advantage of a program like this. So overall, with the housing market, we're continuing to see more home buyers exit the market, especially as mortgage rates have gone up again. But what's interesting is we still haven't seen the latest data. As mortgage rates have recently surged, there's not been up-to-date information as far as inventory, as far as mortgage application data, and it's going to be interesting as that data starts to come out. We'll probably see that more buyers are leaving in the month of September, and you can only imagine if mortgage rates are to go up as high as 7%, what would that mean for the housing market? But either way, this is something I'm going to continue to monitor. I do believe that the housing market has more correcting to do, that the house prices have further to decline. We have not reached the bottom yet. But with that said, I hope you guys enjoyed today's video and gained some value from it. And if you did, do me a favor and support the channel by smashing that like button. And if you haven't already done so, definitely subscribe and hit that notification bell to watch more content like this. Also, let me know your thoughts or questions in the comments below, and I'll do my best to get back to you. Finally, follow me on Instagram and TikTok at The Out of State Investor. And if you enjoyed today's video, I'm going to highly recommend checking out one of these two videos over here. And with that said, I'll see you guys on the next one.